With the market fully recovered from the threat of the tariff wars earlier this year and is now at all-time highs, the question is, where do we go from here? I think the key is in the dollar. So stick with me as we explore this. My name is Brian Cannon, and welcome to Markets in 5. We're only going to go through a couple of charts today. My marketing guy said if I keep talking too much, we're going to have to rename this Markets in 7, and that would be a little awkward. So we're going to keep it to 5 or less. First chart here is the S&P 500, and you can see that right now everything looks really good. So the market has recovered off of the lows from the tariff wars, and it's had a nice V-shaped recovery, and it's broken out to all new highs. And so with that, you have the RSI, which is the Relative Strength Index, which measures the relative performance. And essentially, it's overbought right now, which is okay. So the market can stay overbought and continue to trend up. Now, when it drops down a little bit, it would be opportunities for potentially picking up some more shares or buying the dip a little bit. You just want to make sure that it stays above that red arrow there. It needs to stay above the 50. So the market does very well when it stays above the 50. When it drops below the 50, not so good. So as long as it stays above that and bounces around, we're good. You can see that the trajectory here off the bottom has been very sharp and steep, which is typical, right? So when you have a sharp drop down, generally you have a sharp rise up. And that's okay, but you can't continue that trajectory forever. So you can see that it started to moderate here a little bit, but it's still elevated. It's still kind of pretty steep relative to a traditional kind of uptrend, which is a little bit more kind of up and to the right, but not so steep. And so I do anticipate this to kind of moderate at some point. Now, if we get a pullback, I could see that it could come back down here and test the prior highs, and that would be a good buying signal if it held that and continued up. So if we get a pull down, we just kind of want to watch this area. And as far as the MACD is positive. Now it's, instead of going straight up, it's kind of heading sideways a little bit. But, again, we want that to stay above the 0 line. So it can dip down and play around a little bit in this area. We just don't want to see it drop below the 0 mark, because that generally spells trouble for the market. I think the key to this market and its ability to go up is going to be found in the dollar. When you look at the S&P 500 relative to the U.S. dollar, you can see that when the dollar rises, the market generally drops, right? And when the market rises, the dollar generally drops. And so it's a correlation that's very interesting, and one that needs to be monitored regularly when looking at trading and stocks and picking up equities. And right now we've had a little bit of a rise in the dollar here lately. Now it's all in the context of a downtrend, so lower highs, lower lows. However, if it breaks above this downtrend and starts to head up, then more than likely you're going to see the uptrend on the S&P drop down a little bit. So it doesn't mean that, again, it's going to start a bear market or be down for months and months. It's just more of an opportunity to more than likely pick up some additional shares at lower prices. But we really want to watch the MACD, make sure that it stays, kind of below that 0 mark. It is starting to head up a little bit, but nothing to be worried about at this point. Get out of the way here. So we're watching the downtrend on the dollar. We want to make sure that this doesn't break out too hard to the upside, and we want to watch that relative to the uptrend on the S&P and make sure it doesn't break down too much. So that's the correlation. That's one of the key relationships we'll be watching to kind of help determine if we need to stay risk on or pull a little bit off, in addition to many other factors. Earnings have been a mixed bag this quarter so far, but all in all, technology has kind of come out on top again. It's continuing to lead the charge, not only beating earnings and expectations, but also revenue and everything else. So a lot of good things happening in the market, but I will say we're coming up on a tough seasonality period in the market. Now, if you go to our website, www.cannonadvisors.com, and go to our stock market blog, I explain what the seasonality, kind of the details are. But generally speaking, September is always a very difficult month for the market. August is not a great month either, but not near as bad. So So you might want to just kind of watch this relationship, watch several other key indicators, and determine if you want to pull a little bit off, in August, and maybe look to put it back on in October. So wrapping up, I think we will have some turmoil coming up here a little bit. I'm not sure what will cause it, how long it'll last, or how deep it might go. I think it'll be fairly shallow when it comes, and I think it'll present a buying opportunity to kind of round out the rest of this year. But if you have any questions, give me a shout, and I'll see you on the next Markets in 5.